Good morning, lovely people. We have a morning coffee right here. And in today's video, guys, actually quite an important day for Bitcoin and the regular financial markets, because later today we have a FOMC meeting that is at 2 o'clock Eastern Time, 2 p.m., which would be around 8 o'clock where I live in the Netherlands. And I want to answer the question basically in today's video, whether the price is going to go up or down. And first of all, guys, I'm going to share with you that I don't know, nobody knows what is going to happen. The only thing that we can do is we can look at different charts, look at different signals, and based on those charts and signals, we can actually say like, okay, the likelihood of the price going up after this meeting is maybe X%, and the likelihood that it goes down is X%, and then the bigger likelihood has a higher likelihood to play out. And I have a very, very clear answer, guys, because I think we are seeing some clear signals based on multiple metrics, which I want to share with you in today's video. So, the metrics that we are going to use today are the following. We are going to use time, we are going to use volatility, and we are going to use derivatives exchange data. And let's start off with time. Bitcoin right now is approaching the 60-day cycle. How can you know that? Well, if we basically go to whaleportal.com, you can click on data, you can click on Bitcoin cycles, and you will see exactly where Bitcoin is trading. You can look at the 60-day cycle, 4-year cycle, 16-year cycle, and these red bars are actually the moments where Bitcoin is going to top, but also the 60-day cycle, and we are right now on day 54. So it would be unlikely for that last days to occur that Bitcoin will set a new top into that next 60-day cycle low. This would be a low, but it can also be a temporary low. So that is the first thing that I'm looking at, that is time. And we are actually seeing that cycle playing out with the regular financial markets and with Bitcoin. So based on time, the likelihood that Bitcoin is going to go down is higher. Why? Because we are approaching that cycle low. Then we go to the second metric, which is, I think, one of very important chart right now. That is basically, and I will bring it up for you guys right here. I actually already shared it yesterday over in the video, but that's the volatility index. And what we are seeing on the volatility index is actually a bullish divergence on the daily time frame. And we also, next to having that bullish divergence, we actually dipped into quite some important support. Let me show you that right here. We had the support. Has been acting as support right here, has been acting as support right there. We have a bullish divergence with a lower low, higher low on the daily time frame, but also a smaller divergence with this low right here, and there a higher low. So the VIX definitely looks like it wants to pop to the upside, which 9 out of 10 times comes along with the S&P 500 coming down. Also, when we look at the S&P 500, guys, and I still think the correlation is just pretty big with Bitcoin. That's why I'm also bringing that up. We do see we got some bearish divergences too, right? Higher high, lower high in the relative strength index. So based on these charts, I do have to say that I do think that the likelihood based on the S&P 500 and the volatility is that the price is going to go down. So what do we have? We have time saying that the price most likely going down. We have other charts like the volatility index confirming this scenario. Now let's have a look at derivatives exchange data. Super important, right? I got a couple of things I actually want to say about that. First of all, the exchange balance of Bitcoin is still growing on exchanges. We can see that right here. I hope you can see that, guys, that clearly. The Bitcoin balance on exchanges is going up, which means traders are sending Bitcoins to exchanges. That is one thing that is quite worrying, because often that signals is an early signal for distribution. Doesn't necessarily have to be, and it's really susceptible for manipulation, right? If just some exchanges like sending around Bitcoin onto their wallets. But normally this has been actually a quite accurate indicator. You can look at on whaleportal.com, look at the times that this thing increased, and look at the Bitcoin price, what happened. I can tell you already right now, it is very interesting. I actually made a video about that over on the Whaleportal YouTube channel. Guys, make sure to subscribe there as well. We're not uploading that much videos there, but make sure to subscribe there as well, because it is just super important information. And if you are still watching or you are still into this video, make sure to leave a thumbs up. Very important. Then when we have a look at the funding rates and premium index, then the funding rates are actually quite low. They're still positive, but kind of like on the 0 mark. Premium index is quite negative. That should generally be bullish. And we have a take buy sell ratio where the moving average is going over the green line. Also quite bullish. So the only bearish thing on derivatives exchange data is that we have seen Bitcoin balance on exchange increase. So therefore I'm going to say that in today's FOMC meeting, after today's FOMC meeting, I think the chances of Bitcoin to go down is definitely higher than to go up. But in the shorter term time frame, we might see one last push, one last rally to the upside. But yeah, also take in mind I can be wrong. So based on these charts, I think the likelihood of Bitcoin going down is higher. But we can see, of course, a scenario playing out with a lower likelihood. It just has a lower likelihood, in my opinion, based on the metrics that I'm using for trading. But yeah, it's going to be interesting. Be careful, because there is normally a ton load of volatility going on whenever we are seeing these FOMC meetings. And I think today is also a no exception, no difference. Also, do take in mind, guys, this is something interesting. Often with that FOMC meeting, we are seeing a front run or a front dump, which means that coming up to that meeting, when the price starts to rally significantly, that's actually a warning signal. That's actually a signal that, okay, that's a front run, and then it will plummet to the downside. The opposite is true as well. When the price dumps before the meeting, we might have a positive outcome after the meeting. We are seeing that very often. Let me know what you think in the comment section down below. Often we are seeing that there is kind of a move happening right before that meeting, and then after that meeting, the opposite will happen, because it will trap the majority of the investors. Guys, I think this is going to happen with Bitcoin today. This is what I'm watching. Again, I'm waiting for the new long position on that next 60-day cycle low. That long position will be shared over on WhaleAlerts. If you want to get that information, make sure to join Bybit with the affiliate link down below. If you are from the United States or you already have a Bybit account, you can join bitget. Make sure to join bitget with the affiliate link over on whaleportal.com. Very much appreciated, and right now maybe also needed, because Bybit just changed their policy and we have like a mandatory KYC, and I guess a lot of people are not really liking that, and I can understand that also. And a lot of people are looking for some alternatives. I will look for some alternatives too, not to completely leave Bybit, but just to have some exchanges where I don't have that KYC, because I really like to not have KYC, right? That's why I actually left Binance long time ago. But yeah, there are some options. I'm looking at some exchanges, also some decentralized exchanges. But for now, I think the best option, alternative as a centralized exchange, is definitely Bitget, because Bitget also has a similar trading volume as Bybit. And that is one of the most important things that I'm also saying often, is you need to find an exchange that has a high volume, enough liquidity. Because when there is low liquidity, you have a lot of risk of these flash crashes and stuff. When there's high liquidity, there is just less risk. So that's what I have to say for today's video, guys. I hope you enjoyed it. If so, smash up that like button. If you're new, make sure to subscribe down below. Love you all very much. Wish you all a beautiful day today, and hope to see every single one of you in the next video. Bye bye.